Okay, folks, welcome to Thursday Night Stock Charts Live. We're going to be doing an abbreviated edition tonight. I'll be going to about 6:30. I have a commitment that I need to attend to, so my apologies in advance, but we have a lot to go over still. So let's get to it. We're going to go over Disney. What a messed up company. We're going to take a look at their chart. We're going to look at the headline that broke today by James O'Keefe about Disney's hiring practices. And what does that mean for the stock? We're not going to talk about whether or not we agree with it, disagree with it, whether they're right, whether they're wrong. Obviously, any type of discrimination, if they're guilty, which we don't know what they are, is wrong. So obviously, we frown upon that. I'm sure we can all agree upon that. Now, the question is, what does it do to the stock? So we're going to take a look at the chart, how it closed today, what's it doing in the after-hours session as this video proliferates across the Twitter sphere. And I don't know how the lawsuits don't go fast and furious here. So I think Iger is in a bit of trouble. There's the video out to everyone. Let's say hello to folks. Pete, hey, Pete, welcome. Franklin, of course, yes, we'll do that. As a matter of fact, I'm going to do it now. The reason is that I want to make sure I get members' requests in before I have to log off. I have a hard stop 6:30. So let's get to we'll come back to what the hell's going on here. All right. I'm not sure why I can't enter the symbol on TrendSpider. Okay, let's try that again. There we go. Okay, that was weird. All right. So 6. All right, 6 flags. You know, it's interesting that you bring this up because we're going to look at a chart of Disney stock. And I think that it's warranted. I love this chart. Right off the bat, I love this chart. So we have a Bollinger Band squeeze on a monthly time frame, and we are breaking out of a multi-year consolidation. I love this chart. I think it's awesome. I think it's amazing. Macro view, micro view. It may not be time quite yet. Maybe it got ahead of itself. Maybe we need a little bit of a retracement. But the macro view, that 100,000-foot view of the battlefield, which is the monthly chart, we have seen a bear market. We have seen the consolidation. We have a W formation of which we are now breaking out. So I'm going to make the case here that Six Flags Entertainment has just entered in the month of June, the year of our Lord 2024, a new bull market. Weekly view. All right, so as expected, so you had a squeeze on a monthly view. You still have that squeeze. That Bollinger Band squeeze has yet to fire. Weekly chart, it's already fired off, and it's game on here. You need a retracement, and the first point that jumps out at me here is a retrace down to 20. Show me a 29 handle, and I'm a buyer. If it's optionable, I'm a seller of puts, maybe down at a 30 handle. If they're dollar increments, 29 handle. Daily chart. Inside bar today. It looks like you just may get that pullback, or what you may be setting up for here is a bull flag setup or a triangle formation. What you want, what I would want, because I'm going to put an alert up here in a moment, is a failure. We want to see a failure and a retracement down to this lower band of support. And we will keep this active for, I'm sure, I like this so much. I'm going to keep it active for 30 days. So our alert is set. Uh, we may just flag out here. We may just break out. We don't want to chase. We'll get our opportunities. Let's wait for a pullback on 6 macro view. I think this goes up. And the other chart we need to look at, we're going to go over it in a moment anyway, but let's take a look at it now. This is obviously a consumer discretionary play. Now, consumer discretionary, unlike the rest of the market today, closed up. Now, when we take a look at them, let's go monthly view here, see if we have any consistencies. We have some consistencies in that we have a base. We don't have a squeeze set up here, but we have a base. My only concern here is that the consumer is dead. The however is that Americans of late, these past several years since COVID, have been doing a lot of international travel. Now, if the consumer is broke, they may take staycations, meaning stay home, maybe take a trip over to Six Flags over in New Jersey or wherever they have these. And the domestic business, obviously they only have a domestic business, their business may improve because people are staying domestic rather than international. So that's my take here on Six Flags. Even though discretionary, I'm not in love with. It's basing. It closed up today. It's showing relative strength. Six Flags looks good, so we like it. Let's take a look at. Hey, Talon. Hey, brother. You're welcome, Franklin. Danny, welcome. Sean, hi, Bob. What do you think about starting to load up on? Yeah, so a good point there. I'm going to hold off on that question for a moment, if you will. I'm going to lead up to it. We're already short of the Qs. We've had the SQQQ. I've had that for a few weeks now. Nowhere near the size that we had a few weeks ago. Small, like a placeholder position, just so I keep my interest to the short side when time is ready. So now what we did today is we unloaded a lot of shorts. We leaned into the short side early today as well. And that was on NVIDIA. It was on the triple Qs. And so the day treated as well, knock wood. Tomorrow we have a big quad witching day, options expiration day. Expect a lot of volatility. I would not go trading on tomorrow's price action. So yeah, Sean, we're going to go over that in a moment. We're going to talk strategy in a few minutes, pal. So we went over Disney. Let's talk about their chart. And, you know, when I took a look at the chart getting ready for the show, and again, it's so odd that Franklin brought up Six Flags, because I was about to say that Disney's chart, you know, on a monthly time frame, it looks as though it wants to bottom out. I think we're going to pull back here to 95.52, right down here. If it holds, that constitutes a higher low. I would not buy this stock into earnings. I think that they are going to get clubbed over the head on earnings because this Star Wars venture, I mean, they've destroyed that franchise. So I guess the numbers will be coming out for that movie. Now, perhaps the reason why Six Flags is breaking out is going to help Disney as well, and that helps mute any problems that they see out of the Star Wars franchise. So, but I'm not going to take the risk. I do not like this company. I do not like their management. I will not be an investor of Disney stock. I'll trade it, but I will not be an investor of Disney stock until they clean house with management over there. And I'm talking top down. So Disney stock perhaps bottoming out. Not much of a reaction today on the news as posted by James O'Keefe. Here is a weekly view. We're bottoming out here on momentum. Doesn't mean that we're going to go straight up. What we can do is just take our crayon out and say, okay, where are we at in the weekly macro trend? And we remain in a downtrend channel. So am I a buyer here? because the shares are still up on the week after such a devastating news report coming out today. I think there's a lag effect. I think this is going to take a while. The lawyers are ramping up as we speak right now to go after Disney. Florida is probably going after Disney on this. So this is going to have a lag effect. So we're at the upper band of resistance, weekly time frame on Disney, and I'm not a buyer here. I think we're at resistance. I would be a seller of this stock as an investment. I see no trade here. I would avoid like the plague. All right, let's talk about today's price action. Now, we had initial jobless claims that came out today, higher than expected. The Philly Fed manufacturing barely grew. So jobless claims rising, initial jobless claims rising. We've talked about this. We've talked about the U6 and the U3 Bureau of Labor and Statistics reports showing that we have stopped going down on jobless claims. We have stopped bottoming out. We are now hooking up, indicative of recession. CME Fed Watch tool. Oddly enough, this actually pulled back today, and it continues to pull back. Before we went live, this was at about 64.7. This morning, it was at 70 before the reports came out. And for whatever reason, the Fed Watch tool has pulled back off of that high on pretty benign and bad data, really bad data. So my guess is that it's an inflation concern, and we're going to talk a little bit more about that in a moment. But before we do that, let's talk about the Shiller price to earnings ratio, 35.64. Very, very expensive, and is measured by the Buffett indicator, overvalued, and we remain just shy of a 2 standard deviation move. Very, very overbought in the market. Inflation front. Bullion and black gold bid as bad news was bad news for big tech. So we had bad news today in the equity markets, yet what happened? Leaders did not rally. Initially, some did. CrowdStrike, that was up early, then reversed. I took a look at the charts after the close today. I saw upward moves, then reversals on the day. NVDA up, then reversed. So that is indicative of a market that, or at least I shouldn't say market. I need to take a step back and say of the cues, of the leadership names, of which there's no longer 7. It's not 7 anymore. Maybe it's 4. Maybe it's 4. So we saw inflationary concerns rise today. Oil bid. I didn't check nat gas. Gold went on a tear. Even before the data was released this morning, you had silver up 3%. The last I looked, it was up 4%. So clearly the markets are afraid of inflation, yet economic data is deteriorating. What does that mean? What can I sum it up into in one word? Stagflation. Stagflation. The perfect petri dish for gold is stagflation. Moving on. Philadelphia Fed hammered as inflation expectations soar. Why would they soar? Why would they soar? Is it the fact that we have the Houthi rebels for now, what, a year? Closing down the Red Sea, torpedoing ships? What world are we living in that a terrorist group is now shut down the Red Sea? What this means is that these ships moving forward are uninsurable. Nobody's going to insure these ships, and they need to all go around the Cape of Good Hope, and that means that it's going to be more expensive to ship goods, and that means it's going to get passed through to the consumer like it always does. Moving on. So I mentioned earlier that we went short. By the way, we're using TrendSpider, 35% discount code below, automated technical analysis, NVIDIA. So I flirted with shorting with it about a week and a half ago, and I took a very small loss and just got out quick. We were wrong. It broke out. As a matter of fact, I think it was right here. No, let's go back to a daily chart right here. This breakout here, we were out. So we had a bull flag set up, broke out. Why fight it? Today, what did we do? Outside reversal bar. So where are we at? One day does not make a trend. Where are we at? What do we think is going to happen here? So NVIDIA, we have earnings coming up in August, I believe. So you have a lot of time between here and now for earnings to come out to help goose NVIDIA stock up higher. So on a monthly chart, RSI is extremely overbought. Here is the monthly view. We're just shy of 90 on RSI. On a quarterly view, weekly view, at current with one trading day left to go, a lot can happen here. We have a bearish key reversal on the week with RSI, which is now off of its high. Prior high was 84.35. We are now rolling over a bit. One trading day left to go. For all I know, we hit all-time highs tomorrow. Stochastics, these stochastics are a monster. They have not retreated back down below 20 since the bear market back in October of 2022, when that came to an end. So I think that what we're going to do here on NVIDIA is simple. Right? We're not going to make a bet. We're short, but we're not nuts. We're not going to make the bet that NVIDIA is going to crash and go to zero. We're not betting on 50% retracement. None of that nonsense. We don't have the setup. Just being overbought means nothing. All it means is that you're going to get a correction. For all I know, we bounce off of this lower band of support here, and then we press up higher yet again. Who am I to fight NVIDIA? All I'm doing is I saw weakness begin the other day. A few days ago, it began to weaken. It still lifted up higher, but it was lifting up higher on light volume, and it was just a tell. It was just telling me, you know what? We already have this split. It's getting added to the XLY overweight. What else is going on here? We don't have earnings until August. I think that what could be done to this stock has been done to help goose it up higher. So we went short. We're up on it right now. That could change tomorrow. I'm reluctant to add more early tomorrow to the short side because of options expiration. Now, daily view. Again, outside reversal bar. I think we retrace at least down to VWAP, down at around 123 per share, perhaps even down to this support level here at around 117.50 per share. And then we'll see what happens. We'll probably take profits and move to the sidelines. I'm not going to bet that NVIDIA is going to crash. It's kind of crazy. So that's NVIDIA. Now, the triple Qs, that's a different story. The triple Qs have been moving up. Here's a monthly view to get a vibe. And Sean, I didn't forget about you. So here are the Qs, and take a look at the volume. Here's the moving average in blue for the volume, and what is it doing? It's just dropping, beginning to pick up pace to the downside, yet we continue to drive up higher. Now, where are we at right now? Remember, this is a monthly chart. So we have several trading days left to go. We are up and into and above quarterly resistance here. Yes, this is a monthly chart, but I have overlaid quarterly resistance on top. We are also in green up and into a fractal resistance level. Basically, all they're doing is just connecting the peaks and saying, okay, where might there be resistance? Well, we're at it. We're above it right now. So my bet is that we're going to retrace and we're going to close back down below fractal resistance, and that's at around 471 per share. We could even, as we move into July, retrace back down, retest 466. Am I going to bet that we're going to break and close down below? No, we're going to book profits and move to the sidelines. We're not going to do that, because what are the markets still factoring in here? They're factoring in rate cuts. So We know the anticipation of the rate cut drives the markets up higher. The first rate cut is a reaction to something that's going to drive stocks lower. That's history. I don't make it up. So to the question that Sean proposed, do we add SQQQ? There's a very, very good chance that we do that tomorrow. What do I want to see first? So what happened today? We hit fractal resistance and we reversed. You could argue that we broke down, but I'm not buying it. I'm going to say we close at support. I need to see a break and a retest of this breakdown point, daily time frame, for me to want to go throwing more money into the SQQQ. And if I do get a breakdown and a retest of this breakdown point, that means that this uptrend, which began back here in late May, is done. And we're going to get a retracement perhaps down to 466. Yeah, this is lining up perfectly. Even with the monthly chart, this is our price target for any retracement on the SQQQ because it lines up on a monthly time frame. It's lining up on a weekly, daily time frame. I think that we go lower. RSI is now back down below 80. We haven't been above 80 measurably since, I believe, 2018. So it's rare that it happens, and we're not supposed to be here. So it's a pretty safe bet that we're going to get a bit of a retracement here. Are we going to crash? No. Why? Let's take a look at the SPY. SPY is down today. As a matter of fact, I don't want to go over the SPY. Wrong chart. DIA. DIA today, what it did, it broke out. What caused it to break out? Look no further. XLE helped it. Banks helped. So what we're beginning to see here is not the makings of a stock market crash. It's a broadening out of participation in the equity market. You're seeing energy work. You're seeing banks work. What did the transports do today? Dow Transport's up over a percentage point on the day. So we may be short of NVIDIA. We may be short of the Qs. We're not overly bearish on the macro market. Yes, is it expensive? Yeah. That doesn't mean that every stock out there is expensive. Energy stocks are relatively cheap. Think about it. You've seen oil have a massive rally, yet energy stocks have lagged. Usually they're very, very highly correlated. And you're not seeing that. Well, you saw it today. Oil spiked finally. Energy stocks started to perform. So what do I want to buy? I'm not just going to short the market. I want to buy more energy stocks. I want to buy more bank stocks and enjoy that rally up higher because breakouts, I tried to play the breakout on Palo Alto Networks. Didn't work. Tesla, we traded last week. We made money there. We gave a little bit back this week because it just wasn't working. Maybe it'll rally tomorrow with the discretionary names. We'll buy back in. I'm just not liking tech right now. Just don't like it. It's too narrow in scope of leadership names. And when I put trades on that look like really, really rock solid setups and they fail, fool me once, shame on you. Fool me twice, shame on me. So that's the attitude I have right now with the market. Now, what else do we like here? Let's take a look at a couple of charts that I really dig. Look at this. Gasoline prices moving up higher. Yield curve. Is this updated? Saturday 20th? Yeah. This is not updated. It's updated flat on the week. I thought it would be up on the week. CRB commodity index. Bearish reversal bar. I'm surprised about this. I thought that we would be higher on the week. What do we do today? Gap down today. Let's take a look at gold. Gold looking the bomb here. I was very bearish only a couple of days ago, and now we're looking a lot healthier. This is a weekly chart. We're up over 0.75% on the week. We have a lot of overhead supply here. So with the dollar still trading up on the week, it's a negative for gold. Not let me rephrase. Historically, gold and the dollar trade inversely. Gold today was up along with the US dollar. It's up on the week along with the US dollar without major geopolitical risk. So what does that tell you? It tells you that the dollar is probably overvalued and gold is undervalued, and traders are saying, we don't believe in the dollar right now. We don't believe the rally is going to last all that much longer. And gold is under accumulation, heavy accumulation. And when you take a look at the gold stocks, what did palladium do this week? Palladium we're long of. Bullish key reversal. Members, we may be adding more tomorrow. Gold stocks, NUGT. This is a leveraged product of the senior miners. Beautiful setup here. Bullish key reversal bar on the week. It looks as though we want to move up higher. One trading day left to go. Silver, a strong rally up and into resistance. One trading day left to go. Looking rock solid here. Loving these names. Disaffected Canadian wants Oxy. We have a couple of minutes here, and I got to log off. Oxy, weekly chart. Buffett's buying more. I love this breakout here on Oxy. I'm a buyer. Breakout. Weekly view, or daily view, I should say. Duh. Daily view. Look in the bottom. I think you need a little bit of a retrace here. A higher low. We never did retrace this. This is the Buffett effect. I would wait for the pullback, buy the pullback on Oxy. That's my call. I'm sticking with it. Momentum looking awesome. You could say the same for XLE. Looking good here. Momentum beginning to build. We're getting ready for a breakout. I think that this correction is very close to being done. Why? Oil. Look at this formation here. Look at this wedge formation, a multi-year now wedge formation on West Texas Intermediate crude. This chart looks, we're at the apex of a wedge formation. This is going to get resolved one of two ways, up or down, very, very soon. So I'm bullish on oil. I'm bullish on anything right now that you could drop on your foot and it hurts. And why the dollar is up after the fact that we have the petrodollar, which has ceased to exist. You don't hear anybody talking about it. The fact that they bid dollar up higher the day that it expired tells me that it's probably being artificially manipulated. So be careful of dollars right now. And that's my take. Folks, thank you for being here. Like, subscribe, you know the deal. And get my 5-part video tutorial, my top 5 favorite candlestick patterns, free. Link below. TrendSpider, link below, 35% discount code below. Have an awesome night. Talk to you tomorrow. Be well.